Good evening. This is the Elliott wave update for the NASDAQ 100 for Wednesday, March the 16th, 2022. Another incredible day in the markets today, I have to say, even though just the thrust and the power of which these buyers came flooding back into the market was surprising to me. And it did force a rearrangement of the count. What was the surprise and the amazing fact is that they did it based on what I feel is misguided information. And yet they still came flooding back based on, I think, maybe what somebody else was saying. I have no idea. But with the Fed only raising between 1/4 and 0.5%, depends, I guess, which rate you're talking about, just initially brought out a little flood that they ran it up, but then they actually dropped it down. I'm leaving it here on the 4-hour chart because I want to go over a couple of things. But then they ran it down to almost 13,400 from 865, and then ran it all the way back. And then in the after hours, this was the amazing part. In the after hours, they ran it up an additional 100 points. It was amazing. It was almost as if the funds and the hedge funds and all these guys just could not buy enough. And it's very, very typical. Now, I just want to go back and I want to talk about what I've done and how this all fits in to what is going on. So right now, actually, I will begin on the hourly chart so that we can see it clearly. This continues to be labeled as minute 1. Now, what changes is the height and the size of the minute 2. Now, again, minute 2 cannot break above 14,387. Now, they may have the thought process of, that is exactly where they're going to go, because now we're just going to buy until we can't buy anymore. So no matter what, it truly does not change the little bit longer outcome of all of this. In fact, I was reading one article that was talking about even after this melt up, someone had written that they were expecting an 80% drop. Now, that's pretty much what I think that they're just absolutely striving for, to get this so high that somebody who's big enough, who's been looking to get out, can come in and absolutely annihilate everybody. So I think it is, at least on my part, and you know, I don't want to sound conspiracy theory or whatever, everything else, but I think it's the greatest setup I've ever seen. Bigger than this one. Now, what does that portend? If we get up and break 14,387, now I'm going to go back, because right now the way I've got it lined up, it's still a minute wave 2. Large as it is, it's still a minute wave 2. Now here is where I really do have a continued problem. Although it's not, I'm not labeling this as a completed move, but it's really goes in the other direction. So in other words, a second wave cannot cannot surpass the starting point of wave 1. That's here. But this would be the completion point of wave 1. And then we get an A, and the B wave went below. And the reason that I'm doing it this way, folks, is because it's now gone above what I had labeled as wave 2. And that would suggest that there's no way that it could have been even a minute or subminute wave 2, because it exceeded the starting point for minute wave 1, subminute wave 1, excuse me. So this is what I'm now working. And it continues to suggest that this is just a folly. And there you can see, I'll even open it up even more. That is what they did. So they took it from 13,784, and they dropped it down to 14,663, 464, 13,463. So they dropped it 110 points, and then just started to rally it, and then just push it and push it and push it. So the market closed at 13,955. Then we went into after hours. They dropped it ever so slightly. Look at what they ran it up to 14,025. So it wasn't 100 points. It was 75. They ran at 75. The Dow, they did run an additional 100. It was amazing to watch. And now we're bringing it down. Surprise. Because in essence, to believe that inflation can't be that bad because they only raise it 1/4 point or 1/2 point, depending on which rate you're talking about, is a fallacy. To base that on the fact that, well, crude is still, below $100 is nonsense. To base it on, well, Ukraine and the Russians were going to sit down and talk out, a neutrality agreement is fallacy. It was denied. That was denied by Zelensky, who made an appearance to the US Congress, pleading for help, pleading to declare a no-fly zone, pleading, please come and help us out. This doesn't sound like the man who's sitting down to have a neutrality agreement with anybody. So there's still everything, but the reason the market was down is still existing, other than some whole large group deciding that was it, we're bullish, and this is just how we're going to go. Because there are models that show that the money flow is just piling back in, and that's obvious. That's the obvious part. You can see it. You can see it here, just piling up. Now, one last thing. We got above 14,000, folks. We got to 14,000, almost 26, before they started pulling them back. So there, from that high, we're already down $60. So these moves are getting much bigger. Now, I want to go back out to that hourly chart, because here is what the alternate view has got to be. And originally, I had labeled this as intermediate A, intermediate B. This does count as 5. It could be intermediate C. And underneath it, you put a primary A wave. Now, that would suggest that this is, again, intermediate A. This would, again, be intermediate B, being an irregular. And that we're in an intermediate C wave, which could project upwards of here or higher. And yes, we could get as close as you want, even exceed 16,768, and still be a B wave, because what it would get labeled is a very large primary B wave. Now, what does that suggest? That it's a fool's run, but magnificent trading, I guarantee. Plenty of opportunities to make tons of money, I guarantee. But what lies ahead, whether it gets to this level, his level, or this level, what lies ahead is a disastrous, massive decline. And I would then go with an 80% decline as a primary C wave unfolds and gets labeled cycle wave A. This correction is continuing. This correction off of these all-time highs, it is in force. Whether people want to grasp it, hold on to it, deal with it, that doesn't make any difference to the correction. It is still going to happen. Whether it unfolds in 3 waves and gives us a 3-wave rally, it's still going to happen. So no matter what we want to call it, what we need to deal with is like somewhere out there in this future, whether it's 3 months, whether it's 6 months, or whether it's next week, there are some serious developments that are going to happen that are going to shock everybody. And I'm going to say that when this gets ready to turn, and it does turn, it's just going to absolutely fall out of bed. Now, if you were in the market back in, I have to remember, I think it was 2016, when we had days, even going back to 2020, where we had days where the Dow was down 1,700, where the NASDAQ was down 900. That's what I'm going to be talking about, except they won't stop. It will just keep on going. We will hit circuit breakers. We will just continue to drop because there will be no, it's going to turn to where it just, there's nothing to put support under the market because whatever's going to drive it is going to be so obvious. Whether inflation is going to just continue to go through the roof and then continue to catch an unwilling Fed to step in and do what they really need to do to stop the inflation. And that is to cut off the money, to cut it off for a while, to raise the interest rates, yes, it hurts. And if anybody's listening that actually was around in 1980, 1981, read the work of Paul Volcker. He was extremely unpopular, but I'll tell you what, he stopped it in its tracks when it was happening. And he brought it back from 18.5%, which was the prime rate at the time. That's what the best rate a bank from bank to bank could get. We as the consumers, well, we were lucky if we got 22, 23, 24%, and that's on a loan. That's not on a credit card. That's on a loan. So this idea of that to really kind of get a grip on inflation and what it requires is a lot stronger than what we think, because we need to, cheap money has to stop. It can't exist because they have to stop printing it. So if they have to stop issuing more stimulus, issuing more money, we're cooked. The market will rally, but none of us, unless you're actually in there doing it, are going to benefit from that because everybody's going to get priced out from the market. It'll be more difficult to carry things. So it's going to get very, very, very interesting. But for right now, in my 4-hour chart, so I went through what it could be. Again, that would be if the market exceeds, again, for the NASDAQ, it has to exceed 15,181. 15,182. That's what the market has to exceed. If indeed, this is going to be an ABC and a primary A, and this is going to be AB, and we got a C wave coming, and it's going to be listed as primary wave B. Now, that is the alternate count. Now, in the meantime, the other thing that I kind of want to focus on, besides that, yes, we need to expect some additional upside. If this upside is done, and I'm going to put a C here and label it with a 2 above, again, it's the same scenario. This is how we'll know. It's not going to turn and go down, and then suddenly they start swooping back in to buy it. There will be no reason. It will scare the pants off of everybody at the depth and the size and the reason that the market will be dropping. There'll be the recovery just won't happen until we're down. So again, I state that when this is done, the first leg will just start sliding through all of this as if it was a hot knife through butter. And it's going to break 12,942. And it's going to keep on going. That is what I'm now looking for once this is complete. It's what I was looking for, and they could have started it a lot lower without worry, but no. We got to go through all of this ordeal. Now, so what can we look for? We can look for, we have resistance at 85. It got one up, came back, tried it again. Now it's sinking lower and they're continuing to sell it. Then we have 14,007, which it got up above, came back below, but it still exists. Above that, we have some price resistance up here at 14,060. Then we have 14,163. then 229, and then that 387. Now, they want to continue to power as if everybody has not been sucked in that needs to be sucked into this, then we do stand a chance of getting up there. If they want to continue with the money flow and keep talking about how money's flowing into the market, eventually that's going to run out, but because they'll all be invested. So, but it can continue. Then we'll know that we're shifting over to the alternate, which would put this as A and B, and that's a C, primary A, and now we're just off. We're just running. Okay. Well, actually, this would be primary A, and that's A, B, and now we're in a C word. Now, what I want to talk about right now as well is I know there are a lot of people that put on positions and they have put positions and they have other positions that really were reflecting a more severe move lower. You were not wrong. I was not wrong. That is what the market was indicating at the time. With this influx, we have to be able to, if you're going to trade in the markets that we're involved with right now, I think being more flexible and trading what's in front of you. So in other words, it's like, I am not going to hold on to a position that is just going against me and against me and against me and against me because I'm feeling that the market shouldn't go up. Because the market is telling you at that moment, we are going to go up and we're going up in leaps and bounds. So it's much easier to keep your focus on what's actually trading in front of you and being able to trade the price action. When your price action is telling you we're going, then you have to be able to reverse whatever's going on and you have to play with. Now, by doing that and by following price action and following as it breaks through, and I want to open this up a little bit. Come on, do it for me. When it started to break right there, it broke the hourly 200. Look what happened. It accelerated. It broke the hourly 20, way down here. What happened? It accelerated. It broke the 50. It accelerated. Came down and touched the 50, didn't break it. It accelerated. These are just, keep in mind. Here, we came down, we broke the 20, we accelerated, we broke the 200, we accelerated, we came to the 50, held it, broke below it, came back above, came back above, then got back above the 200, and it started to accelerate in the opposite direction. Yes, it stayed red because it had a lot to cover. But then look, just kept on going. That's an hourly bar, massive hourly bar, which is now over 200 points in an hour. And that was into the close. That's how powerful it was. That's how much was coming into the market. Why fight it? So again, mindset. Don't, instead of going, he's wrong or you're wrong or I'm wrong, nobody is. It's just what is happening now. Put your mindset to work for you and go with what's happening. Don't fight the market. Don't work a short position in the futures or in an underlying stock that it just straight float. I mean, if it is a defined risk, then it's going to be a little bit better. You're going to lose some money, but you're not left out hanging. And again, if you're long puts and you're just long the put, you're going to lose what you paid for the put, more than likely. Now, because this was yesterday morning, right? The 15th, today's the 16th. Yesterday morning. So we have gone over 1,000 points in a two trading days. That's amazing. So again, if we can go up that quickly, tell me that we can't go down that quickly and I'll call you. Yeah, it's like, sorry, but we can. We can. And what's going to do it is an absolute knockout punch in the face of the market that it's like, wow, you were wrong buying all of this. And so here we go. And but what's going to also jive it and just absolutely drive it, should news come out to really pack it home, no, we're not going up, we're going down. All of this money's going to want to come back out. And then you're going to see the acceleration. And then you're going to see what I've been talking about. But in the meantime, let's continue to play what's in front of us. Today was an awesome trading day. It was not that difficult to get in, to hang on, and to make money. And I'm not just talking little money, I'm talking big money. So trading the futures, this was great. This was great. But I'll tell you, if I'm going to get stuck on that, we're going to go down and then hold a short position, I ought to give it all back and then give him even more. It doesn't make any sense. And these moves were thousands of dollars, not just like a couple of hundred here. We're talking that the market moved size 200 points in an hour times $20 a point. That's a lot of money. Now, the downside, yes, it's playable and it's workable, but be able to follow the price action and follow your moving averages and what's going on. Granted, the Elliott count had to change, but I laid that out yesterday. If it got above here, this is what is going to happen. Then I'm looking for higher levels. So once it broke there, it did come back down, I will say. But when it came up and it broke it for good, it just kept going. And then I had to change it. In fact, as soon as it broke it first, it broke it even by a little bit, I took it off. Even though it went back down, didn't make any difference. I had to change it. So, but I got to play both sides. Now, again, I know I'm kind of pontificating and I don't mean to sound that way. I just want to make it very, very clear that don't get stuck on anything. This is a moving fluid market. Don't get stuck on a count. I can't. I may be expecting it, but I keep telling you, trade what's in front of you. And when the market is moving against what you're thinking, then put the thought aside and trade what's in front of you. Make money. Don't give it based on what your feeling is or what the market should do or what I even laid out. I try each day to lay out what's happening on both sides. If the market's going to go up, this is what I'm going to look for. If the market's going to go down, this is what I'm looking for. If I don't get it, like here, I thought, oh, good, we're going down. Oh, good, look at what we're doing. And then boom, it stopped. But and as soon as they started to go and broke back above that 200, okay, we're not going to go down anymore. So you change, you look and you change. You have to remain open to what's going on right in front of you and not get hung up on what Michael laid out the day before. Because again, I try very clearly to make it clear, upside and downside. So again, I'm going to finish up with this. Upside, we need to allow for another break above 14,007. So the high was 25. So if it goes above 26, we had that 14,060, should be some price resistance, maybe some additional at 75. Then it's going to go. And if it goes, it should get above 14,100. So we got 14,163 and then 14,229. That puts us all the way up to 387, which is where the high of minor two is. Now, I'm not going to get hung up on that. If it wants to break above it, I know what I can go over to. It's a huge B wave. It's still going to go up. But I can't rely on, well, I'm going to hold my short until this. I'm going to hold my short until that. You're going to lose your shirt. So please trade what's in front of you. Worry about a count. Worry about where things are later. Continue to trade what's in front of you and learn to trade price action. Now, if this market is done, and that did complete this corrective phase that we've been in process of, then this market should turn, and it will turn very hard. And it will just start to break the 4, the 8, the 20, the 200, because it's still sitting here. We're not going to take much. If we get a little bit more up, the 50 will be above it. And let me tell you, if that happens, this is an alignment. And basically, it already is an alignment to continue to go higher. So to break all that, that one swoop needs to start dragging this down. We already know it has the capacity and the ability to do it. We saw it there, right? It got up to there, came down to here, and this is where the numbers came out. They tried to poke its nose up, didn't work, and they just sold it, and they sold it, and they sold it. And whomever's running those orders knew what they had coming in behind it, and they just started to buy it and buy it and buy it. Regardless, the market has the possibility where it will, in one swoop, break moving averages. So that's what I'm talking about. The next time I feel if it's going to come down and it's going to really have the power, A, it's going to be news driven. B, there's going to be something that throws the right hook to the jaw of the markets, that there's absolutely either a knockout and then it's just the sellers kind of come in. And that's why it's going to feel like it's a crash. Because all of this would immediately be drained out of the market. So 2 trading days could be wiped out in 2 trading days or 1. Okay, I'm going to leave it there. Please trade price action. If you're finding that difficult, then get in touch with me. There's things that I can do to help. Come join the trade room, even if it's for a month. You can get in with, this is what I do every day. And so it's a part of not letting something go. And trust me, there are times when I do. And it's just because I'm being stubborn, but I'm going to tell you right up front. But when you can just switch out and go with the flow, when the market's letting you know, we're not going to turn here. If this is, you're waiting for a turn back lower here, as soon as it broke above that, you say no. And that was at what point? The 486. So maybe you're short from 420. That's 60, that's 48 points. 68 points. That's a lot of money. You don't need to lose any more. It's not going to go back down. It broke it. That invalidates your trade. You go on. When you're trading, you pick your point where you want to get in, what's your target, but then also where does the trade become invalid? And that's your stop. Okay? Now, I'm here to help. I really want everyone to be trading well. So if you're caught up on something, please get in contact with me. Now, I'm going to leave it here. Tomorrow, I would expect additional upside, unless something comes out that just absolutely flips all of this momentum to the opposite direction. Next update will be Thursday, the 17th.